It's another edition of the Trading Tips video newsletter, teaching you how to become a successful trader today. This video newsletter is brought to you by PortfolioCrafter.com.
Welcome to this edition of the TradingTips.com video newsletter. In this episode, we'll be learning about pattern recognition and how you can recognize the potential for breakouts. Without further ado, let's begin. There are many stock chart patterns that can signal breakouts, but in this episode, we'll be looking at three: the cup and handle, the double bottom, and the head and shoulders patterns. First, the cup and handle. Here I've included a chart with a cup and handle drawn in. The characteristics of a cup and handle are as follows. A new high forms the left side of the cup. From there, the price declines from the high in a U-shaped motion. It must be U-shaped, not V-shaped. In this example, there is one outlier, basically making our cup into stemware. But as there is only one, this can be safely ignored as an anomaly. From there, the price must ascend in a U-shaped motion, ultimately reaching, surpassing, or nearly reaching the recent high set earlier. Then the handle is formed. After reaching or nearly reaching the new high as part of the right side of the cup, there is a sharp pullback. At this point, the stock price begins consolidating, meaning there are many consecutive days of similar stock prices. Oftentimes, there's a slight descent to a handle, and from the handle, stocks typically break out to huge new highs. As you can see here, the stock broke out to new highs from the cup and handle. This was a real-life example of a Portfolio Crafter stock pick, ticker APEI. The left side of the cup began on February 19, 2009. The base consolidated on March 27. On April 1, we placed a limit buy order on the stock at 41.42, and just 2 days later, APEI opened at 45.21, exceeding its price target for a quick 9.15% gain. But cup and handles have made much huger gains in the past. Walmart and Microsoft, for example, broke out to 7,250% and 152% gains coming out of cup and handle formations in 1979 and 1990, respectively. Moving on to another chart pattern, let's look at the double bottom, one of the most historically bullish chart patterns. A double bottom begins with a precipitous drop in the stock's price to a new multi-week or multi-month low, and then rebounds. But the initial rebound fails and is then followed by a second price drop similar to the first one. From here, though, the stock breaks out, creating a W formation. Here's an example. Notice how the bottoms come to points. In order to be a double bottom, this is necessary. If the bottoms were rounded or drawn out, this would not be a double bottom. Also, be sure to differentiate between double bottoms, which are bullish, and double tops, which are bearish. Double bottoms are W's, double tops make M's. And of course, you need to know when to buy a double bottom. We'll look at that in the next slide. Here are the characteristics of a double bottom you can spot before it breaks out, making the right side of the W. The second bottom should be within 0 to 4% of the first bottom. The failed advance coming off the first bottom should be at least 10% and no more than 20% higher than the first bottom. And once the stock has made the second bottom, wait for it to rebound a bit. You won't even know the double bottom has been formed until it does. Don't be afraid to show some patience here. Getting in late is better than getting in too early before the double bottom has been confirmed. Now for a bearish chart pattern that can signal a downside breakout. The head and shoulders formation occurs when an uptrend forms a lower high, which is close in price to a previous high point, and separated by a higher high in the middle, and finally falls below the neckline created by the low points. Here's an example of the head and shoulders formation falling below its neckline. Here you can see how understanding the downside breakout potential of a stock is just as important as its upside potential. Not only can it help you know when to sell, but it can also help you identify potential short sales that will allow you to make profits in a down market. We hope you've enjoyed this TradingTips.com video newsletter. Thanks for watching and good trading.
This video newsletter has been brought to you by Portfolio Crafter. Manny Backus designed Portfolio Crafter to be one of the easiest trading systems available on the web today. But don't take our word for it. Visit www.portfoliocrafter.com and access the free special report. It will show you how you can place profit-rich stock trades in just 15 minutes a week. Read the free report and you'll understand how the easy money's made in the markets. To access the free report, visit PortfolioCrafter.com. Portfolio Crafter, another market-beating investment service from WealthPire. Take control of your financial destiny. View more Trading Tips videos. Visit TradingTips.com. Sign up for our free video newsletters and become a successful trader today.